guys, and welcome to the Crypto Investigators. I am David, your favorite residential technical analyst. I have given myself that title. But anyway, that's just, I'm just one of a few or many, several, it is what it is. But anyway, hey, how are you guys doing? So I decided to put together this video, because I felt like I was getting a little misconstrued with my view on the market. I feel like that recent takes of mine, at least, seem to make people believe I'm just like providing hopium that I'm providing hopium, and they probably also believe that I'm providing that hopium based off of nothing. But I would argue that I have not given any hopium because, first of all, this is a very uncertain market, for sure. So, we'll get into that in this video. I'm going to go over Bitcoin. I'm going to go over the price chart. I'm going to go over indicators, all different kinds of indicators, even a software that I use. So the indicators, and then also just kind of give just like a brief global outlook, see how things are going around the world, and then we'll just go ahead and wrap it up. But this will be an extensive video for sure, so just strap in and sit tight and enjoy the video. Make sure you hit that like and subscribe, especially if you enjoy the content. Also, please go over to the @CInvestigators Twitter account. Give us a follow. And then come down here to our Discord and join our Discord. So in our Discord, members shill coins in the cryptos to look at channel. We put those cryptos up for a vote once a week. The top 3 choices that got the most votes, we at the Crypto Investigators make video overviews on those cryptos, and they're very basic, just overviews, not real technical in the breakdowns. We'll be getting to those in the future, trust me. That is coming down the pike at some point. But for now, it's just about growing the community and putting in the foundation of what we are trying to build here at the Crypto Investigators. Now you can also follow the rest of the team at Mr. Use Case, at CryptoNaut73 in the video down below, and myself at Lunar Beaches. But that's going to be it for the introduction, guys. That's 4 minutes of an introduction. That's enough. I think that's enough, right? So let's go ahead and get into this video. Hit that like and subscribe. So the first thing I want to do is I want to go over this tweet that I put out today. I said, lots of Bitcoin moving on to exchanges to scare you. It makes 0 sense for these Bitcoins, almost entirely long-term holds, 1 year or longer, to be sold at these prices. Did you know you can buy other cryptos with BTC? Did you know that exchanges move crypto around all the time? No, they must be selling. Eye roll emoji. So I just want to go ahead. So let me just go ahead and show responses. We got My buddy XRP Gordy on here saying as soon as 17K breaks, so he's assuming 17K we're going below that, and we head into 16K, it's gonna be wild. And then fellow crypto investigator, lead investigator, Mr. Use Case, OG in the space. We going under 18K again soon. Eyes, big eyes. What does that mean? You know what that means. So, and then my reply was everyone expects lower prices, typically a good bottom indicator, which, you know, isn't necessarily untrue. I mean, every time Bitcoin's dead, it goes on a bull run. Because or not goes on a bull run, but at the very least, it gets the market, like you bottom. Yeah, you bottom. The market's corrected. It's done. And it's time to move on towards more bullishness. So, but I just wanted to go over what I was meaning by this right here. My general point of this is don't get so caught up in narratives. Don't just a lot of it you have to drown out. Some of it is legitimate, but there's so much out there. Most of it, I would say, is just noise, and it's just a narrative, and it's there, placed there on purpose to scare you out. Because let me tell you guys something. Bitcoin right now has just crossed a previous cycle's all-time high for the first time in history. So, I mean, why wouldn't you want to be buying right now? Also, nothing in this video is financial advice. I, David, am not a financial advisor. Yeah, so just wanted to say that. But yeah, so Bitcoin it's just well, let's just go ahead and dive into the charts. And I think we'll be able to explain things, or I will try to explain things the way that I'm seeing it. But yeah, my overall point was don't just follow narratives. Don't just think of the narratives like that. Yeah, there is legitimate stuff out there. We'll get to that in this video. I do plan on getting to that. I will be getting to that in this video. Like I said, this is going to be a long video. Maybe an hour, maybe longer. Like, seriously. I really wanted to go into some extensive research, as we are the crypto investigators, and that research includes technical analysis, news, and fundamental analysis, and also outside of the crypto world analysis. So it encompasses a lot. It's just a broad macro view of things. I will go down, I will zoom in also in this video. So you know what? Just stick around and watch to the very end, and I think you will be able to come away with something good. So just stick around, and so like the video, helps us in the YouTube algorithm. Dislike it if you're hating this, because we're already 9 minutes in and we haven't even gone into the charts yet. What are we gonna do? Trust me, it's gonna be extensive. It's gonna be a lot, but I'm gonna break it down in short, simple segments to the best of my ability. Well, so without further ado, here we go. This is the Bitcoin and macro landscape overview, breakdown, outlook, forecast, whatever you want to call it. We're doing it. Let's go. All right, guys. So first off, I just wanted to briefly go over some short-term price action. So right now, the current bottom, which may not be a bottom, current bottom happened down here on Saturday, I believe it was. Came all the way down to 17,780, and then popped up and has gone up as high as 23.54% from the low. All right, so let's get rid of all that. And currently we are in a channel. It looks like it might be bending in a little bit, maybe kind of wedge-ish, but I don't know. I don't know. But we do have three three touches on this trend line, which typically means that that the trend is definitely up. Definitely up. If it was going down and you had three touches, then the trend would be a downtrend. Not only that, and I'm trying to just do some basic 101 trading. But not only that, we also, after this bottom here, we've come up, come down, come up. So right there, you set a higher low than this one right here. And then also we crossed this, and that gave us a higher high. And we pulled back, and then we entered this channel. Okay? So, and then now, within this channel, we've just zigzagged, but we've also been able to maintain higher lows. Maybe this one, working on this one, and higher highs. So we're definitely currently in an uptrend. So what I would be looking at would be this line right here. I just go ahead and draw a trend line. This line right here. And seeing it, well, not really that line, but this line right here. This whole line right here. Let me go yellow. So this white line right here, if this was to break out of this line, then I would expect to come down at least to 20,300 or so, and then bounce up. And then from that point, we would see if we get rejected. And if we do get rejected, then I do expect this price to fall down lower. So how low? I would go from the bottom to the top, and right there, somewhere in the golden pocket between the 50, the 618, we're at the 50 is 19.6K, the 618 is 19.1K, the 702 is 18.8K. So that's the type of move that I would expect out of that, barring some kind of, another black swan or something. So right now, we're just trying to hold structure right here on this uptrend. That's what we're currently trying to hold. So if that fails, we'll have to see what happens. See if this trend line then turns into resistance. And then if that's the case, then we will fall through like I just showed. At least with the possibility of going down into the 18Ks. So always, so this is just like short-term price action. This is what I would be playing. And if we go ahead and we throw an EMA ribbon on here, now what I would like to see is a bounce off of here, have that EMA ribbon come up, and then have price come up and then test and then bounce up and come back up to this upper range up here. That's what I would like to see. And if I did get that bounce, I would enter a trade and, pick up just a little, 4.2%. I usually go 3x leverage, so that's 12% gain for me. But I don't recommend that for everyone and unexperienced traders. But that's just something that I like to follow. And also on this EMA ribbon, anytime, see right there, you can see we got it touched and it got rejected. So, but anytime price comes up and crosses above that, I consider that to be very bullish. And especially if the green of the EMA, if the green EMA gets above that yellow line, because that yellow line is a 200 moving average. And anytime you're above a 200 moving average, typically you're in an uptrend. Like how it broke right here, this was a nice little uptrend. Once it broke that 200 week EMA, maybe I need to zoom in a little bit for you all. Once it broke that 200 EMA down here and the green crossed over, so that was also that would have kept me in the trade. So that wouldn't have, I would have waited for this to come down to here and see if it bounced off or not. Didn't even make it, did a little bounce, still didn't make it, but kind of sort of bounced off of that EMA and then shot up. And then once it came back down, did another bounce. I would probably, since it broke down, since it didn't immediately, I would probably come down here and I would wait for it to fall through. And then eventually it did. And then that's where I'm probably exiting, is right in here myself. Down here, it tells you to exit down here, which is a little too late for me. So I just, sometimes you just got to be able to recognize the downtrend. And one of the easiest ways to do that is once that price fell below this bottom right here, that would have been a nice place to get out right there. And so you're not losing a lot as far as profit because you got in down here. So that's a 6.29% gain. Whereas from the top, that's a, well, actually I should go from the bottom to the top. So you miss out on like 4%, but that's just where you got to weigh your risk. And yeah, so always be mindful of the risk that you are taking. Something else in your arsenal that you can use when making these trades is the RSI indicator. And as you can see right here, RSI broke above the 50 mark, which means, and it really went up, but then it got rejected. But as soon as it bounced off of that 50 mark, and it actually didn't even make it to it, but as soon as it came back down and then bounced off, so anything above the 50 mark on the RSI is considered to be an uptrend. And the higher it is, the stronger the uptrend is. And then once you start getting above this line up here, the 70, that's when you start getting into overbought territory, which means it's time for the market to cool off. But as long as you're staying up in the 50, it's a good time to just stay in. Maybe, once maybe you take profit here, we got a really nice top right there. Take profit again up here on this RSI. And then as it's coming down, I would say finish off right here. But even if you wait until, okay, we've crossed below the 50, we've come up and we've crossed below the 50 again, that signifies to me, okay, I think we are now heavily in a downtrend after we've already gone into the overbought zone. So now we're down below the 50 and now it's time to get out of the trade because everything there's what's called confluence. And a confluence is just anytime a bunch of indicators come together at once. Like they're all around like the same, like everything's happening at the same time. Like this top is happening here, right at this top right here on price action. It's right after we got a long signal on the EMA ribbon. And then just a multitude of other factors. You can throw in a MACD in there that could be bullish. You could see some divergence on here that would be bullish. All of those things coming together all at once, that is when you make your best trades. And so that's just something to keep in mind. That is just basic trading 101. And yeah, that's going to be it for the low time frame, little bit of basic trading explanation there. And yeah, let's go ahead and move on to the good stuff. All right, everyone, before I go ahead and dive on in, if you could please hit that like and subscribe buttons, and maybe the notification bell to be notified for when we go live or create new content. We love you guys, each and every single one of you. And now, without further ado, let's break down Bitcoin. So first, I've brought up the weekly chart for Bitcoin. This is Bitstamp. Bitstamp has the entire history of Bitcoin. So I wanted to bring that up because that allows me to have maximum EMA whatever. But anyway, so first thing I want to point out, and I pointed it out in a video the other day, is the fact that we came down and we nailed the 400 EMA and have since bounced off. Ever since we've bounced off, we're up 17.5%. So right now, that doesn't mean that was the bottom, okay? And I do want to go ahead and lead with saying this. I don't know if the bottom is in or not. I'm not sure if the bottom is in or not. Seems like pretty much most other technical analysts do believe that we have lower to go. And the prices on how low, it varies from analyst to analyst. So, and then that's just how it is. It varies from analyst to analyst, and that's where I'm not seeing a whole lot of confluence as far as price. Outside of, I've seen 14K mentioned a lot. Well, 15K first, 14K mentioned even more. Or 14K is probably mentioned the most, I would say. Then you have some people saying maybe 12. And then the second most, I think, would be 10K, people believe. And then third most would be we've already bottomed. And fourth most is like $8,000 or below. So, like I said, it's a wide range. And I get it. I understand why. Because we're in uncharted territory, especially with the global economy, the global markets. It's just kind of, everything's just so uncertain. And, you add on the Black Swan events of Terra Luna, and its USDT stable coin, or USDT, whatever it was, their stable coin. And then you add in Celsius, and then you add in, other stuff that we'll get into later in this video. But right now, let's just go back to focusing on the EMAs here, okay? So back here on the C19 sell-off crash, that was a major event, and In one day, it crashed 50%. And over 1, 2, 3, 4, 5 days, it crashed 62.8%. So these crashes aren't out of the ordinary for Bitcoin. And this, for anybody that's been in crypto for any amount of time, knows that these types of crashes happen all the time. Especially just in, well, most of the time the market's pretty volatile. It does seem like we get a little bit of time where it's just like sideways action, but I think for the most part it's kind of volatile. So, which is why I love it as a trader. But anyway, so and that right there, that was the 350 EMA, and then the 2018 bottom was actually the 300 EMA. So this one up here actually came down lower on the EMAs than the actual bottom of the 2018 bear market. So and people call this a crypto winter, and I could see why. I mean, just look at it. It was really slow until the very end, and then that was it. Bitcoin, on the other hand, has come down pretty quickly. Like almost as quickly as it went up, it's come down. And then not only has it come down, but it's also crossed over into the previous 2017 all-time high. I'm going to go to the bottom of this wick here, and then the top right there, right? And right now we're kind of sitting on the previous top, and it just turned green. And this is on a weekly chart, so but that might change throughout here. So we have, we have the camp of we're going to go lower, and there's some reasoning behind that. It's not it's not just doom and gloom. There is technical reasoning behind that, and I want to go over the history of Bitcoin, and I'll go ahead and turn off these EMAs so we can see this a little better. Go ahead and remove this. So if we go over the history of Bitcoin, we can see we have these, these bear markets, these really drawn out bear markets. Now this one at the very top was December of which one is this? 2014, I think. Anyway, and then 2013. And then to the very bottom was an 80. Let's make sure we get it right. So, an 86.79% crash or correction. This took 413 days for this correction to occur. Now let's go to the top of 2017 and then go to the bottom of 2018. Now, I want you to recognize something before I move on, and that is the fact that people tend to believe that bear markets that Bitcoin bear markets, crypto bear markets, well, I guess Bitcoin bear markets last for years, which has literally never been the case. And the reason for that is because the bear market is only the top of the peak to the bottom of the trough. So that's the entire bear market, because everything after that is up and to the right. Everything after this is up and to the right. Even with this crash here, we're still above the bottom, and so therefore we are still in a bull market. So I just wanted to point that out. Now this drawdown here lasted fewer days, and it lasted about almost, I would say, yeah, it's 2.71%, right? So 2.71%. So it was a smaller drawdown, and then we had then the previous market cycle top to the bottom. So smaller drawdown and in less time. Now let's go to our previous top, and let's go down to our current bottom. So right now, the current bottom sits at about 74%. Let's make sure we're right on point on that. Yeah, about 75% was the full drawdown from the very top. And it has lasted 217 days. Now, this is where I get into where we could be possibly heading and how long it could take us to get there. So let's just say we're following a numbers game and we're just following the trend, and let's just go ahead and knock off at least add on at least 2.5%. So we were at 75, 77, 61 sounds good. That puts us at about $15,900. So could we drop that low? Absolutely. So now if we just go ahead and we go down and we say, all right, with 81.39, somewhere in there, 81.39, where are you at? 81.28, 81, let's just overcompensate, 81.50, okay? All right, so that gives us a price target of about $13,000. Almost dead on the money, $13,000. Now, the question is, what is the difference between the days from here to here? So if we do 413 minus 364, that gives us 36 plus 13 is 49. So we can subtract 49 days from 361. 39 days from 361 or 64. So let's do that quick math. All right, so I did the math and it turns out to 315 days. And so I extended this out 315 days, and that takes us to September. No. This is a joke, right? So Bitcoin always seems to bottom out. So bottomed out here in January, and then bottomed out here in December. Then I guess I would have expected a bottom out in November, which would actually make more sense. But that would just add that 364 days. Wow, what if it was 364 days? And that's right after the midterms, which, if you didn't know, price tends to, all right, so after November, price started moving up after the midterms. And then in 2015, I guess that wasn't after the midterms. It still had a ways to go, but as soon as 2015 started almost, it just started going on a rampage. So, I mean, every market cycle is different. So always keep that in mind. Every market cycle is going to be different. Could we still go another, so the full drawdown, 81.51%. From current price, that is a 36% pullback. How often have we dealt with 36% pullbacks just regularly in a bull market? How many times have we dealt with that in a bull market? You got a pullback here, 37%. This is on Bitcoin too. This isn't altcoin. 31%. What is this one? 39%. What is this one? 40%. I mean, you see what I'm saying? Like, what's left in this, most likely, isn't a lot. And it'll just be a normal pullback, which is why, not financial advice, DCAing right now would be absolutely beautiful, especially if we start doing something like this and then maybe a pop-up or something, I don't know, but then we catch that bottom and then we just start going on up. I mean, that is definitely in the realm of possibility, and I think this is what most people believe is going to happen, which this is where we get into some Elliott wave theory. So let's just go ahead, set the chart for that, and then let's just move on. Now, briefly, I do just want to go over the Fibs, especially on the weekly chart. If I draw this horizontal line here, which is the current bottom on this weekly chart, as you can see, it is the most we have ever been oversold aside from 2011. So, I mean, this was the bottom of the bear market here, right here, of the 2015 bear market. This was the bottom of the 2018 bear market, and we are much lower than we were then. Now, granted, we're in much different conditions. We had a pandemic, which was this crash right here, and then we have massive inflation going on, supply chain crises, just you know. Just the economy is pretty bad, is what I'm trying to say. Like, the world economy is pretty bad. We've got a war in Europe. It's just like everything just seems to be happening all at once. But it still doesn't take away from the technical fact that this is the lowest we've ever been oversold on Bitcoin, at least on the weekly chart. So, I mean, I can't just take that with a grain of salt. I mean, that is something. And again, my message, even though I'm not a financial advisor, so, just don't just go off of my words, but I just don't see why people wouldn't be accumulating at this point, even if it does go lower, even if prices do go lower, which I'm going to get into altcoins also later in this video and show how, well, first of all, I just shared it last week on Twitter that at the time that I shared it last week, 72 of the top 100 cryptos, the top 100, this isn't 500 and something, this isn't 589, this is the top 100, right? 72 of them at that time had already seen a 90% plus or plus drawback or pullback, like correction, crash, whatever you want to call it, already seen 90% plus. And these are your, I would say, top cryptos because they're in the top 100. So, I mean, more top, the lower you go, further down or further up the list, I should say, the better the cryptos and that you tend to be. But not necessarily, because there are some out there that are really old projects that are still hanging around somehow. But, hey, I guess they have strong communities, and, communities build crypto. Community, networking, all that stuff is what crypto is, or a lot of what crypto is about. So yeah, take that for what it is. But yeah, so the RSI, you can see the peak here. We actually peaked before the actual peak up here. And we didn't get the blow off top that we all wanted or anticipated even. But we still had a parabolic move. But yeah, so yeah, that's just the RSI portion. So, it's the lowest it's ever been. I mean, it could go even lower. That's always a possibility. I'm just saying that with it being this low, we might want to think about DCAing in and starting to accumulate, especially if we do go a little bit lower, or even if we just hang out until, well, that's 2023. But even if we just hang out until September, sometime between September and November, and then we start creeping back up. But that is this whole time period right here, the next 4, 5, 6 months are going to be significant in when it comes to your accumulation. That's just my opinion. That's not financial advice. Just gotta throw that out there as much as possible. But now we'll move on to the next segment. All right, next up, we're going to do something that I really enjoy, and that is a little bit of Elliott wave theory. So let's just go ahead and dive on into this. So first thing I just want to point out is that this looks like a clear 1, 2, 3, 4, 5. It's either that, or I'm sorry. This is it right here. 1, 2, 3, 4, and 5. So this right here kind of shows, we've completed this part of the cycle. My argument would be that maybe we could see an 1, 2, 3, 4, and then a 5 wave down to this zone right here. This is all in the realm of possibility. This is also close to that $13,000 mark. So maybe I am being a little too bullish with my posts recently. They're not really bullish. They're not meant to be bullish. They're meant to just say, hey, I think it's a good time to start scaling in. That's just my personal opinion. Again, not financial advice. But it is. I really do think that it's a good time to start scaling in. Especially, I wouldn't buy this top up here, obviously. But outside of that, I think it's a good time to start scaling in. And coming down to this high right here, I mean, that makes sense to me. Coming down to this block, especially this order block. Right. Let's see. Order block. I guess I would consider this candlestick right here an order block. Possibly. We did get a touch there. We did bounce around in here. Then we did bounce off of there. Yeah, I'm comfortable with that. So somewhere in this 10 to 13K zone, I think if we hit 13K, I'm selling my house. Even though I rent, I'm selling it, and I'm going all in because, again, this comes down to confluence. So we have a lot of confluence there. Now let's go ahead and throw some fibs on here. Actually, I drew that the wrong way. I want to go ahead and draw a fib. Let's go from bottom to top. And that gets us down in between the 0.786 and the 0.888. Close, right, almost smack dab in the middle of them, which makes sense to me. Especially like right there, $12,663. So I could definitely see over the coming weeks a dead cat bounce in here. So I just I just want to make it very clear that that with my post, I'm not saying that the bottom is in. Okay? I'm not saying that the bottom is in. All I am saying is that we, we all I'm saying is we're very close to the bottom. I believe. I believe we're very close to the bottom. So that's my personal opinion. Um, we could have already bottomed, or we're very close to the bottom. Either way, I'm accumulating at this level, and then I'll wait to see what happens here. If it gets rejected and we push down and we push through here, I'll be expecting this target. And then at that point, I think I'm going long. Me personally. It could fall out. Anything could happen, but Bitcoin will more than likely deviate from the rest of the market. And there's a few reasons why, or from the rest of the world economy, whatever. One of the reasons is because there's 19,000 plus whole coiners, and they're holding on to those coins. Trust me. My father is close to being a whole coiner, and he refuses to buy anything else. 1, 2, he takes it immediately off of exchange after he gets it, so he knows what he's doing there. 3, he's not going to stop buying, and especially he's already starting to throw extra cash in at this point, because to him, after being in this market for 5 years, these are really good prices to him, and he's really close to that one coin. So it doesn't really matter if it goes lower or not. He's not taking the risk of it maybe going lower. And that is a risk you have to take at this point, especially once we've already seen a 70% drawback. And another thing on that, this pullback right here within wave 2, this was a 64% drawdown. And this wave 4 was a 57% drawdown, but this wave 5, or this after this wave 5, we've come down 74%. So 64, 74, I don't know, maybe this was just one, and this is where we go into like the rest of the Elliott wave stuff. So I'm just going to go ahead and delete this and this and this. And what if we are in a super mega cycle, and this was an irregular top, and we've come down, right? And this is just one large correction like we had back in here. And then you had that massive C19 sell-off. Well, what if this has just been one massive correction? And even if we go lower here, as long as we don't cross over into 1 here, this could still technically be a wave 5. So we could see Bitcoin break out in 2023 and then come crashing down super hard. Maybe not 3,000, but come down crashing really hard, and sometime in 2023 for whatever reason. So I still believe that there's time between the halvings. I still believe that there's time in this market for something like that to play out. So especially if we go ahead and get this dive over with. Now, once if we do start to do just that little, just accumulation boring phase, then I'm going to rule this out. I'm going to say, all right, yeah, if we're just going to not go ahead and start pushing higher here, then this was the most likely top. And then typically the tops are like almost a year, sometimes shorter. So, like I said, November-ish, that's 1 year, and then October, and then September. So somewhere in that range is where I think the bottom could possibly be, especially if we have not already bottomed. So that is so that is a little bit of the Elliott wave theory. Now, if we want to go from here, and I'm going to say 13,000 is the bottom. Let's just say 13,000 is the bottom. Then what are we looking at for future prices? Now, I'm not going to go by the time. I just want to look at future possibility of price from the top to the bottom. So if we were to come down and bottom out here and then work our way up, next bull run, actually it would come down here and it would come up to, so this previous bull run, we only got up to a little bit above the 3.618. Didn't quite make it to the 4.236, which there's not much difference there, obviously, in percentage. I mean, you're only talking about a 15% difference. From the very bottom, you're talking about an 18x. So 1,800% gain from the very bottom. And then you are talking about price range between 218,000 and 253,000. So I could definitely see that playing out for sure. So it's almost the only logical next step once we've completed this bull market, just because of the previous bull markets. So the question is going to be, how will the macroeconomy, macro markets affect crypto as a whole? But for that, I just now I want to show you guys a software that I use. It's called Lux Algo. I'm gonna go ahead and throw it on here. I'm gonna make sure it has the most basic settings on. So none there. So these are reversals, confirmation, and exits. So Lux Algo, it's amazing indicator package. It comes with all other kinds of indicators too. So a lot of them. There's a lot of Lux Algo indicators that are free. Also, this is not paid. I'm not paid to do this. I wish I was. Hey, Lux Algo, sponsor me. Us sponsor the crypto investigators. But shameless. I'm trying to make money, folks. Okay, this channel can't run itself. But yeah, so Lux Algo is an amazing indicator. So these bands on the top, the red and the green, these are what they call reversal zones. As you can see, price can extend past them, and then you can see this blue X up here, and that X just means that's a take profit point. So go ahead, take some profit off the table. We've extended past the reversal zone band, and we're in good profit from where it said to buy to then. Okay. Also with Lux Algo, you've got this. This is the neon cloud. So this just helps with spotting, tops. Well, actually, more like trends. It helps you spot trends. If you're below it and it's red, then the trend is down. And then the lighter that the color gets, the more, I believe it's the more action there is. And then once it turns blue, that means you're in an uptrend. And then what I like to do is I like to play off the bounces. You get a bounce off of it. And then also with this indicator, it's so awesome, especially, but it's not just a one side. Like, you can't just go, oh, it says strong, so I'm going to buy. If it says sell, I'm going to sell. First of all, you're probably gonna win more than than not, but you're not gonna get as big a gains as you could get. Now with this indicator, with this premium indicator for Lux Algo, I mean, there's so many settings in here you can play with that are phenomenal. This is just the basic. But anyway, what it's done right now is that on the weekly chart, it has touched the reversal zone for the first time in history on the bottom end. First time it's ever touched the bottom end on the reversal zone. And I do I do love this indicator. I think it is awesome. Could it get deeper into the reversal zone? Absolutely, just like it can get deeper in the reversal zone to the upside. You see it more so on the daily chart than you do on the weekly. You can really see all the interactions. And then, what I like to do is, they've got a setting called the trend catcher. And so what that does is that it kind of tries to catch trends, as they're happening, but like while they're happening, instead of being a lagging indicator, it's more of, I guess, a present indicator, or I forget. I'm blanking on the word that I'm looking for. But yeah, once that turns green, these candles turn green, and you also follow the market. Make sure we've popped up above that green line here. Okay, we got a strong sell signal or strong buy signal. We've kind of played around up in here, but then we got this bounce, and that looked really nice. Probably get an entry. You hit that, come up, or at least come up close to that reversal zone. You get the X for take profit. And then at this point, it just says sell out of the market. We turn red on the candles. We turn red on the trend catcher. And then we go south. And that would have been an amazing 59% short. And on leverage, forget about it. So that's just an awesome indicator. But I use it with other indicators too. I mean, I'll throw on the EMA ribbons, and once the 20 crosses the 55, because I'm on the EMA, not the SMA. Once the 20 crosses the 55, that's usually a good indication that you are in an uptrend or a downtrend. So like you can see it right here. They're both kind of yellow, so it's kind of hard, but you can see the cross happen right there. And let me go ahead and change this to white. So you can kind of see, so you have this line coming up, and then it comes down. Then you have this line coming up, and as you can see, the top line came down and it crossed the other one. That is the 20 crossing the 50, and that's typically a good indication of a time to sell. So at this point, we have a sell signal here. We have a red trend catcher. We've been sitting in a downtrend for a couple of weeks. The Neo Cloud is turning red, and then we're also breaking this EMA here, and it's just like a whole confluence, right? It's just a whole confluence of events. You can put in a short, and then your first take profit's here. You keep on holding on. You got another take profit here. You come out, you bounce out of the reversal cloud, and then sell. Sell. So, confluence. You can go ahead. You can add whatever else to it. You can do your Fibs, your RSI, all different kinds of stuff, man. I love this indicator package. It is a little pricey. I think it was a few $100, but I mean, it was worth it. It's definitely worth it. It's definitely worth to have in your arsenal of indicators. It's not a market cipher, but it's pretty darn good at doing what it does. So, yeah. All right, now I want to go into the more macro perspective of things, just like looking around all different types of markets. I'm staying in crypto at first. This is the total one, which is all of the cryptos in the universe that have ever existed, okay? So I just wanted to point this out. So even on this, we have this 1, 2, 3, 4, and then maybe a 5th wave up. The reason why I believe this could be the case, and I didn't even see this. I didn't even see this before. I paying too much attention to Bitcoin. But this is kind of where I was trying to go earlier, in another segment, in the last segment, was so the whole crypto market in general. Let me take this off because that's not what we're here about. So the crypto market overall, we had an impulsive move up here, and then we had a correction here. Okay, this correction lasted about 259 days. This current correction, if we go and we were to say this was the bottom, 217 days. Now, what did I say in the last segment? Well, two things. We could still go a little bit lower, possibly. So maybe this gets extended a little bit, but also there's diminishing returns. But also in true Elliott wave form fashion, the fourth wave is not longer than the second wave, which is a rule. That's a rule. The second wave, the second corrective wave, or the fourth wave, cannot extend the amount of time as the first corrective wave or the second wave. So this is the second wave, this is the fourth wave. And one of the rules is you cannot extend past the time of the previous corrective wave. So this has been in shorter time, and even if we were to go down a little bit more, maybe take a little more time, and we draw down, but we're already drawn down pretty good. And also wanted to point out that this was a 73.3% drawdown, and this was a 75% drawdown. So very similar in the amount of in the amount of losses, I guess, in the downturn, in the corrective pattern, and also shorter in time. So it fits both rules, or it fits every rule for a 1, 2, 3, 4, 5 Elliott wave count. Another one is the bottom of wave 4 does not cross into the territory of wave 1. So wave 4 cannot go down this low. If it crosses into 1, then this was the 1, 2, 3, 4, 5. However, if we come down here, and this was the 1, 2, 3, 4, 5, then we have met all parameters, all rules for a 1, 2, 3, 4, 5 Elliott wave count on the total crypto market. This does not mean that we can't go lower, but until this passes 259 days, we are still pretty good. But we kind of want to stay where we are right now, because I think it's about somewhere at 75-80%. Once you go past that, it becomes less and less likely to be a fourth wave. So where it's at right now, it's sitting at a really good spot as far as Elliott wave theory goes. And then with that, you also have your 1, 2, 3, 4, 5 inside of inside of wave 3. And then you have your A, B, C corrective pattern, A, B, C. And not only that, I bet from this top to this bottom, let me make sure this is the right size, right there, and right there. We actually went lower, so it's not even similar equal length, it actually went lower. So, but that doesn't really matter. We have a completed A, B, C correction, and let me go ahead and throw a fib on here. And what do we have? We've come down to the 2 just about. So maybe we do have that little bit lower to go. All right, I've got to make sure I've got these on the same. Yeah, there we go. This is the actual bottom right here. So yeah, and we've actually, we've basically nailed that 2 right here, right? The 2 fib level, 200% fib level. And we could come down a little bit further. I think there's a 2 point, I don't know, 2.268, 1.618, 2.618. No, this is this one, 2.618. Doesn't matter. There's another fib level down here that we could get to. But as long as we don't cross this one, wave 1, we don't come into the territory of wave 1, this could be the bottom of the entire crypto bear market. It's very possible. And the only thing, one of the things that is, there's many different things that could play into the fact that that's not the case. But I think that I'm not sure, what I'm unsure about, and what so many other people seem to be so sure about because it hasn't broken yet, is the halving cycles. However, what do we get to? What do we get up to? We got up to $3 trillion. We got up to a $3 trillion market cap, right? We don't get there with retail. We get there with institutions. There's no way $3 trillion from retail money got into the crypto market. We all know that that's a bunch of institutions. We know a lot of it's MicroStrategy. We know some of it's Tesla. We know some of it's El Salvador. There's a lot there. And also, something important to point out is that miners have stopped selling. They were selling off so that they could pay for their bills because they kind of had to sell off. So there's that. And then I'm hearing rumblings of a possible another crash happening in the market that could be tied to another big entity, and the one that I'm hearing the most is Tether and a Tether collapse, which let's just go ahead and dive on into the next segment for that. So this is the USDT to USD chart. As you can see, it's only sitting at 0.9988 of a dollar. So it hasn't reclaimed its peg yet ever since the sell-off from Luna kind of freaked people out and gave a massive Tether sell-off. Now, I'm not exactly sure how this works because this isn't an algorithmic stablecoin. This is allegedly supposed to be an asset-backed stablecoin, or at least a paper-backed stablecoin. There's supposed to be money behind this stablecoin. So it hasn't in 42 days. It has not reclaimed its peg, and I'm even going to go from when it dropped and it just kept on dropping. 51 days. 51 days Tether has been dropping and stayed below the $1 mark. And in its history, Well, let's just do this an easier way. Scan across. I mean, we have had fluctuations, of course. We have had fluctuations. This was a pretty steady decline in here. And this was this is 2020, so this is, of course, C19. This is all of March of 2020, and this was 64 days. So, but we were still hovering around that peg, but it's not, unimportant to recognize that, yeah, I mean, this is kind of like spending a bunch of time down here, is it not? Here's one right here. How long was this lasted how long? This was 66 days. This is in 2019. So I understand that it hasn't found its peg again. Look at this. How long did this go on for? I'm just going to start from right here. Just from right here. 120 days it didn't have its peg. So, I mean, are people analyzing this like how they should be? This is 2018 bear market. I mean, this is all the 2018 bear market. Look at Tether. It's mostly sitting below the $1 mark, and towards the very end of the bear market, it really went low. So if we compare that to today, I mean, what are we talking about with Tether falling apart? What are we talking about? Now, one thing I can say is that if we go to USDT dominance, we can see that its dominance has been falling a little bit. Hasn't been going up. Well, let's just say it's 8.13% of the market. So let me just go ahead and go to USDC.D. Okay, and I went over this in my last video. It's up to 6% of the market, and it has just been roaring up. So what I am seeing in the market more than any kind of craziness is just people, because of the Tether FUD that has been going on for ever since it existed, essentially. Because of that Tether FUD, 1. 2, because Circle obviously wants their stablecoin to be the #1 stablecoin, and there's a lot of reasons. There are a lot of reasons to believe that USDC will be the United States dollar, digital dollar. There's a lot of reason to believe that, and I think people are starting to see more stability in USDC, and I think that's why it's starting to eat away at the market cap of Tether. And I don't think that's anything to be concerned about. I think that's actually going to end up being better, to be honest. I would rather have USDC than USDT any day. So I just need exchanges to start accepting USDC pairs, or listing them or whatever. That's what I need, because I'm tired of dealing with USDT. I am. But so yeah, USDC is definitely taking over here. So, in my opinion, and it won't be long, and USDC will reign supreme, probably by the end of this bear market, especially if the bear market does go into later this year, September, November. But yeah, so let's just go ahead and look at some other things. Let's just go ahead and look at the dollar currency index, and what are we looking like on the daily. So we had crashed a little bit, but now we have a symmetrical triangle going on in here a little bit. Now we don't have our third touch yet, so it's hard to say that that is for sure an uptrend, but we did have like 4 touches here, and we broke out of that. So maybe the dollar currency index is about to have another little miniature breakout here, which of course typically has an inverse correlation with Bitcoin. So when the DXY is going up, when the DXY is going up, Bitcoin is going down. And then when the DXY is going down, Bitcoin's going up. That's typically how it is. It's not 100% all the time that's the case. That's just how it typically is, because we can go ahead and look at the history of the index. And I know you guys have probably seen this, but I'm going to go ahead and go over it. This right here, 2021 bull run. This right here, 2017 bull run. This little downward action right here was the 2013 bull run. So anytime the DXY has been in a downwards, price action, having downwards price action, Bitcoin's been in a bull run. And right now it has broken out above these highs, and essentially we're just waiting to see just how high this thing can go. All right, here's another something else I wanted to go over on the macro landscape of things. This was just something that I found on TradingView under important events. This says global stocks give recovery vibes. So last week took many global stocks to milestone lows, but the FTSE has a good day while the U.S. celebrated Juneteenth on Monday, and it looks like the love is spreading. Now, for those that don't know, the FTSE is the Financial Times Stock Exchange. So the FTSE 100 lifted 1.5% on Monday, making a small attempt to recapture some of the 4.12% that was wiped off last week. The index is suffering through its worst month since C19 first hit the market in March 2020, and prices are currently at a 2022 low. The Bank of England delivered a 25 bips rate hike last week, keeping cautious in comparison to the Fed and the Swiss National Bank's recent shock hikes. Sterling has fallen over 9% against the dollar this year, and strategists say this tame approach means more pain on the way for the currency. U.S. indices want a piece of the stabilization action, set to rebound in Tuesday morning trading after futures jumped in Monday's after-hours trading. We did see that in today's price action. The whole stock market did end the day in the green. Or I shouldn't say the whole stock market, but all the big names did. Most of the big names anyway. Futures on the Dow lifted 1.45%, S&P 500 futures rose 1.67%, and NASDAQ futures lifted 1.7%. Still, all three are trading around their lowest levels since 2020. So yeah, I just found that interesting. So if you guys like little snippets like that, I'm sorry about that. I don't know what just happened, but if you guys like little snippets like that, little quick little things like that, let me know. Hit that like button or comment down below. Now, a little bit more of a macro view. Now, this is the Japanese yen to the US dollar, and as you can see, it has been crashing. And Japan is having some kind of issues with its economy. Apparently, it's like faltering pretty bad. I'm not going to go into like a news article and all that. This video is long enough. I just wanted to point that out. We also have the, what is it, the yen USD? What is yen? Is yen Y-I-N? Is it yuan? Yuan USD? What is China currency? CNCA, what? DXY currency index, US dollar currency index, Japanese. See, this is what I gotta deal with. But anyway, China. Something's going on with China too. Its economy is going to hell in a handbasket. Also, another quick hit. The European Central Bank, the ECB, just raised its interest rates 25 bips. So I'm sure that'll have an effect on the Eurozone. Also important to note, SPF, or I should say SBF, Sam Bankman-Fried, and FTX have bailed out other exchanges, including Voyager and was it Celsius? Someone else, but they're BlockFi. So I don't know. You guys let me know your opinion in the comment section down below. And thank you for making it this far in the video. If you have, it seems like you're really enjoying it. And since you're really enjoying it, you might as well hit that like button and subscribe to the channel if you haven't already. But yeah, so I don't know what your opinions are on this, and you can tell me in the comment section down below. What do you think about crypto companies or other crypto exchanges bailing out other exchanges? Do you think this is good for the market? Do you think this is bad for the market? Should we just let things die, even though a lot of retail investors get hurt in that process? Just so we can weed out the bad projects, or should we bail them out and let them try to learn from their lessons, from their mistakes, and then move forward? That's one reason why that's one thing that gives people that people believe that Sam Bankman-Fried is basically saving the crypto market by bailing out these exchanges and saving us from crashing into the abyss. Now, I don't know. I don't know. I'm kind of at this point. I haven't really thought it through too much, so I'll just say I'm in the middle. I don't really know how I feel about it. Mostly because of the retail investor side of things. I don't like seeing average people get hurt, and if they can get a bailout from the company that put them in financial pain, then great. I do believe that this will probably be the end of Celsius, because once that gate is lifted, once that wall is lifted, and people are allowed to get to their money again, get to their crypto again, you better bet your butt there will be a Celsius bank run. People will get their money out of Celsius, and Celsius will die. That's just my pure speculation on it. There's also speculation, rumors out there that Sam Bankman-Fried took down Luna and Celsius, and trying to take down Three Arrows Capital and BlockFi and all of those other exchanges to try and basically get them under their wing by bailing them out. And we've seen this happen before, with other institutions, and it would be no surprise to me. So I don't know if that's what's really going on. You guys can tell me what you think in the comment section down below. For more info on this, I highly suggest you check out Plan C on Twitter. He's gone into great detail on this situation, and they're even planning on doing something about this situation. There's also like a $20 million bounty for anybody that can find the people that have been attacking these exchanges. So I don't know. It's a crazy world out there, and you know what? The only thing that concerns me about it all is that that means that the government has got their eyes all over crypto. The regulators are salivating at the mouth, and it also wouldn't surprise me if it was a government entity that was making all this happen. And Also, another link between Sam Bankman-Fried and, the Biden administration and just Democratic Party in general. There's links there. We know Democrats aren't very friendly with crypto. So, there's just all kinds of, weird stuff. But I think that one of the catalysts for this year could be, well, not for this year, but, maybe this year or the beginning of next year, before the next bull run could be the ETH merge, if that actually ends up going through, or it could be the end of the SEC versus Ripple lawsuit. So, anything could happen at any point in time. We just never know. But what we do know is that the prices are low and that it's a time to accumulate Mo. That's not financial advice. That's just what I think. Thank you for watching this video. I know it was pretty extensive. If there's anything that you think I missed, please let me know in the comment section down below. If there's anything that you would like to point out to me that, I haven't said in previous videos or in this video, but if there's anything that you want to point out to me that you think I should look into, that you find interesting, let me know. Let me know in that down below too. Or just hit me up on Twitter at Lunar Beaches. Hit up the rest of the team at Mr. Usecase at Cryptonaut73. Join our Discord, link in the description box below. That's going to be it for this video, guys. Thank you for sticking around to the very end. And if you did, remember to hit that like and subscribe. Share with your family and friends. We all love you. We all appreciate you here at the Crypto Investigators. And until next time, stay cool. Yeah, stay cool. Bye, guys.